So Rocket Labs reported their earnings the other day, and the stock is rocketing higher. Now we are seeing a reversal, rightfully so, as investors are taking some chips off the table. Before we look at the analysis and the best levels to get long again, let's actually get into the news. So Rocket Lab shares are up more than 35% after they reported third quarter earnings and announced news of the first customer for its upcoming Neutron rocket. The firm reported quarterly revenue of $104.8 million, marking a 55% increase from the same quarter last year and surpassing Wall Street's forecast of $102 million. However, their net loss widened to $51.9 million from $40.6 million a year ago. That just means that they're growing. Nevertheless, this was slightly better than analyst prediction of 11 cents per share loss. Now, for the forward guidance for the fourth quarter, the company projects revenue between 125 and 135 million, setting the company on track for approximately 430 million in annual revenue at the midpoint. Again, the company also announced its first Neutron rocket launch contract, which secured a confidential commercial satellite constellation operator for 2 missions scheduled in mid-2026. The company stated that the contract price aligns consistent with their target for Neutron, which had previously been set around $50 million per launch. Now, this is the first pure rocket space public company, right? SpaceX, owned by Elon, is not public as of yet. And so investors are trying to get ahead of the curve based on SpaceX's valuation. Now, this is the monthly chart. You can see price broke what was all-time highs near $22. But let's go down and see why we had the huge move higher. This base drop served as monthly sellers. Price broke through that and closed above this zone back in September, and in the process created a flip zone. So you have this rally in price, base and candle, and then rally out on a gap. So let's mark this now as monthly buyers. We'll say at $9.75. All right, let's go down to the weekly chart. And not only do you have a monthly buy level, you have a weekly buy level right at about $11.25 in the form of this rally, base and candles, then a rally out. Now we kind of seen this setup in my previous video on EVGO. And when you have a level on level, it makes it for a very powerful entry for long in this situation. Now let's go down to the daily, or the week, the daily. You can see all your moving averages starting to move higher and expand, signifying momentum to the upside. This candle is the candle in control. And so typically what happens is if you start getting candle closes below the low of this candle that's in control, prices are going to tend to trickle down. Candle closes above the high, well, price tends to move higher. Again, this is an explosive move higher in a short amount of time. So the charts are suggesting look for price to pull back further. How much further? From the high to the breakout. The charts are suggesting at least price pulling back to the $16 level. Anything below that, you'll be selling at a discount. Anything above it, you're selling at a premium. In summary, the charts are suggesting once you go long, if you get a steep pullback to about $12, sub $12, first target is going to be the high established at $22. Thanks for watching. Subscribe. Please like the video.